All right, we're about to dive into a forensic investigation that honestly sounds like it was ripped straight from a spy novel. But this isn't fiction. This is all based on cold, hard market data. So let's just jump right in with the big question, the one that's at the heart of this whole thing. Could a massive corporation, one of the biggest on the planet, have known about a major military attack before it happened? We're going to follow the evidence piece by piece and see exactly where it takes us.
Okay, so our story kicks off with a sudden military incident and a really strange puzzle that popped up in the financial markets right after.
Let's quickly get the timeline straight, because the timing here is absolutely crucial. So, tensions were already simmering. Then, boom, 8 a.m., Universal Time, the incident happens. A couple hours later, the official government statements start coming out. And by the time the U.S. markets open for business, the whole world is reacting.
Now, as you'd probably guess, markets hate this kind of chaos. Investors started dumping stocks, and fast. But in that sea of red, one huge company stood out because its stock went the other way. It went green. And that company was Exxon Mobil.
So where do you even start with a mystery like this? Well, you followed the money. We're going to trace the digital breadcrumbs left behind in the stock market data to see if we can figure out what on earth was going on.
And this table right here, this is the core of the mystery. On a day when the S&P 500, which is, our benchmark for the whole U.S. market, plunged 1.5%, ExxonMobil went up 1.5%. That's a 3% swing against the entire market trend. That is really unusual.
Seeing it visually like this really hits home, doesn't it? The market takes a nosedive, but Exxon just climbs. This is the exact kind of thing that gets financial investigators to sit up and pay attention. You just have to ask, why did this one stock zig when everyone else zagged? And it wasn't just the price. The sheer volume of shares being traded was 2.5 times its normal daily average. Now, huge volume like that tells you something important. Big players, the major investors, are making moves. This wasn't some quiet little drift upward. This was a stampede of buying. A lot of money decided it needed to own Exxon stock right then and there. Okay, so we've got a bizarre price move on massive volume. The next logical step in any investigation is to start hunting for fingerprints. We've got to go beyond the big market data and look for actual evidence of foreknowledge from inside the company. And to do that, we're going to use a kind of forensic checklist. We'll systematically comb through official insider trades, we'll scrutinize every public statement they made, we'll dig into the options market for any weird bets, and we'll check to see if some analyst report might explain it all. So let's take them one by one. First up, the most obvious place to look: insider trades. Did any top executives or directors make a big move right before the attack? We dug through 90 days of the official SEC filings and nothing. Zilch. It was just business as usual. So our first clue is a total dead end. The evidence here is weak. All right, what about public statements in the options market? Well, on the communications front, again, nothing. No weird press releases, no cryptic warnings. But the options market. Okay, now this is a little more interesting. There was a noticeable spike in activity. But after sifting through all the data, we couldn't find a single massive smoking gun trade that just screamed foreknowledge. So we have a hint of something here, but it is far from a knockout punch. But hold on. Before we all put on our tinfoil hats, any good investigator has to consider the other side of the coin. Could there be a perfectly logical, maybe even boring explanation for why Exxon stock did what it did? And there are definitely a few plausible alternatives. I mean, maybe investors just see big oil as a safe haven and pile in during a crisis. It's possible. Or maybe it was a reaction to some totally unrelated company news that just happened to break at the same time. It could even just be the weird plumbing of the market. Big index funds automatically rebalancing. These are all real possibilities.
So this is where we're at. We have to weigh the evidence. On one side of the scale, you have the super unusual stock performance, that huge volume spike, and some fishy options activity. But on the other side, you've got a whole list of perfectly reasonable alternative explanations. It's not a clear-cut case at all.
So, after laying out all the clues, all the evidence, and all the counter-arguments, it is time to deliver the final verdict based on everything we can see in the public domain.
And based on our forensic analysis of all the public data, the verdict has to be undetermined. Look, while the stock's behavior was definitely suspicious, there is simply not enough concrete proof to make an explosive claim like that, Stitch.
We can even put a number on it.
we're about 70% confident that undetermined is the correct call. But that other 30%, that represents some significant uncertainty. It's all the lingering questions from that weird trading volume and options activity that we just can't answer with public info alone.
So, what would it take to close that 30% gap and get to a real answer? Well, it would take things that you and I just don't have access to. We're talking about subpoenaed internal emails, testimony from a whistleblower, or secret trading data from financial regulators. Without that kind of information, this mystery officially remains unsolved. And all of this leaves us with a much bigger, more important question, doesn't it? When you see cases like this, floating in that gray area of suspicion, it forces you to wonder, in a world of complex global risks and lightning-fast trading, how can we ever be truly sure our markets are fair for everyone? That's something to think about.